When you're applying for a home loan, there's one thing and one thing alone that will get you approved, right? And that is a credit score. So in this video, I want to break down what is a good credit score that the banks will approve you for, and how is the credit score calculated, and what should you do to maintain a good credit score. But first, before I go to that, as you know, in this channel, we talk all things real estate, all things personal finance, so that you are the driver of your financial situation, not just the passenger. Okay, so what is a credit score? A credit score basically is just a number that indicates to the lender, the bank or the financial institution that's going to be giving you the money, that you are worth the risk, or you are a high risk or you are a low risk. That's what basically it tells them, right? So in terms of what is a good credit score, what score identifies you as a high risk or as a low risk. So let's break that down, right? If you have a score of 300 to 499, that is very poor. And I'll explain to you how do you get to this level of being very poor as we go with this video, right? And then if you are from 500 to 610, it means that is just poor. And then if you are from 610 to 660, it means it's fair, right? The minimum that the banks are willing to accept is a score of 610. Then they will, in most cases, consider you and give you the bond. But in most cases, if they give you the bond at that level, you will have a high interest rate, which means that you will have higher installment, or the loan to value, or the LTV will not be 100%, which means that if the purchase price is 500,000, they might give you 90% of 500,000, or 85%, 95%, which means that they will not give you the total amount, right? And then what is a good one? A good one starts from 661 to 780. If you have that, then you in most cases get the deal with no issue, plus with low interest, which means that you will have a lower installment, which means that you save more in a long term, right? And then an excellent one will be from 781 to 850, right? That would be very, very excellent, which means that you're going to save much more, you're going to pay much less, you're going to get a very good interest rate, which means that it will be prime minus guaranteed, right? So where do we find the credit score, right? So in South Africa, we have 4 major credit bureaus, right? We have Experian, we have TransUnion, we have CompuScan, we have XDX. But there's other companies like ClearScore that also tracks this credit score, and you can check it from there. Because like for example, ClearScore works with Experian, so they get all their data from there. So you can get it from there, right? No issue. And then what is the importance of maintaining a good credit score, right? For sure, you will have a loan approval, a home loan approval with no issue. You will have a stronger bargaining strength in terms of the low interest rate, in terms of the low installment, and in terms of saving in a long run, right? Because that's what all we want to do. We want to live in this house, but we want to pay less for it, right? Just like when you buy any product, you want to buy this product that you want, and you want to get it for less, right? That's what you want. Okay. So this is the most important one now. How is credit score calculated, right? So a credit score is based on what we call a FICO score, which has some criteria that are used to calculate, right? So I'm going to start with the biggest one. The biggest one is payment history. The payment history is very much important. It determines about 35%, it contributes 35% of your FICO score. So this is really the biggest contributor to your FICO score. So what it means when they check your payment history, it's just a matter of, are you paying your all debts that you already have at that time? Are you paying them in full, and are you paying them in time? Right? So that's what contributes to 35% of your credit score. So if you're not paying in full and if you're not paying in time, then it's gonna get your credit score much lower. This is very important, and this is one of the major reasons why most people are getting declined, right? And the next one is what we call amount owed or credit utilization, which contributes to 30%. 30%. This is very high. So if you combine the 35% of payment history and the 30% of the credit utilization, you combine those two and you just master those two, you are sorted, because that is 65% of the credit score that we are talking about. Right? Those are the major contributors. So when you are looking at the credit utilization, you are talking about the amount that you owe, right, of the available debt, right? How much have you used compared to the credit limit that you have? So in most cases, what I advise people here is to make sure that you always make sure for your revolving loans that you maintain a credit utilization that is less than 30%. If you cannot do that, at least maintain it to be less than 50%. So that will ensure that you actually have a very good credit score, which will work in your favor. But at the end of this video, towards the end, I'll add a bonus point on how to properly use credit utilization, because it's very much important to master the credit utilization. Like I said, it constitutes 30%, and you really want to be a master of that, right? And the next point is what we call credit history, right? Basically, the longer you have the debt, the better for you. So having debt is not necessarily bad, right? It just means that if you have debt for longer and you have it in control, you'll be fine. And this credit history contributes around 15%, right? Which is also really not much, right, compared to the other two that I just specified. Ne? And the next one is new credit, right? So the more you make new credit at a short interval or at the same time, it indicates that you are higher risk, right? It indicates you are higher risk, and this contributes 10%. So you need to be careful not to make a lot of debts at the same time, right? Because it just shows that you are a risky person. And then the last one is credit mix, which contribute also 10%, right? You do not have to have all the kinds of debts, right? So the credit mix is just talking about maybe a retail account, maybe a credit loan, maybe a home loan, maybe a vehicle loan or whatever. But you do not have to have all these kind of credit, because this contribute 10%. Rather focus on the credit utilization and the payment history, which contributes together 65%, right? So those are the two major contribution in terms of your FICO score or your credit score, right? That needs to be your main focus to improve your credit score, right? So in actual fact, how do you actually improve your credit score? How do you do that, right? Before I get to that, if you see, I mean, this information that I'm giving you is very important for so many people, right? It's very important for you, and I'm sure in some way it's helping you, right? So let's help this channel to get to reach more people, to assist more people. So you can do that by liking this video, by sharing this video, but the most important thing, keep subscribing, and when you subscribe, hit the notification button so that when I upload, you just get automatically notified. So let's get back to the main talking points of the video, right? So how do you actually improve your credit score? The first thing is that you must not apply for more than one loan at the same time, right? Apply only for one and wait for a longer period of time, then apply for the next one. Because if you apply on a short period, then it shows that, okay, you are so much desperate for money, right? Which is not good, right? And then you must always make sure that you pay your accounts in full and you pay them on time. This is now affecting your payment history, which again, I repeat, it contributes to 35% of the FICO score. So it's one of the main points you really must focus on, right? The other thing is that you must keep servicing your debt, and you must only just dip into the debt when needed. Don't just now try to go all out and empty out your credit limits. No, don't do that. So you must always avoid spending up to your credit limit, right? So it's very much important. Né? And then avoid owing more than the third of your gross income to debt, right? So you must make sure that you keep your income to debt ratio not more than 30%, right? And this, I'm sure, is very much difficult for so many people because so many people are already above this, right? Which is, you need now to work and recover to come back, right? And what is important is that in cases where you feel that you are not able to pay, right, to pay the full amount, right, make an arrangement with the banks, make an arrangement with the financial institutions so that you pay whatever that you can afford, and that does not reflect on your credit record. Because when it started reflecting on your credit record, it's contributing 35%. And it's so difficult to recover from that. Eh? So I see this every day because I'm helping people buy houses, and it's sad when people really have circumstantial situation that they need to buy a house, right? But you know what? They cannot buy a house because of these circumstances. So I promise you to add some bonus tip, right? As I said, credit utilization is contributing 30% of the whole credit score calculation. So this is only for people that are disciplined, right? This is only people that are disciplined. Like, for example, I use my credit card for this reason, right? I don't need my credit card, but I use it to make sure that I always keeping my score high, right? I always want to keep my credit score higher. So what I do then is that on my credit card, I choose the lowest limit that I can get. Like, for example, for petrol to travel, I don't need so much money. So, I mean, my credit limit is around 2,000 per month, which is mainly for use to pay petrol, right? And to only make sure that I improve my credit score all the time, right? So what I do is that, okay, I only use the credit card to buy petrol, but at the end of the month I repay all the money back to the bank institution, and then I just repeat the cycle all over and again. So that's how I use my credit card. So on my credit card, there's what you call a statement date. There's what is called a closure date, right? A statement date is the date where you the credit bureaus, they look at your statement and they look at what amount is owed on your credit card, right? So for example, if I'm saying that my credit limit is 2,000, so at that date, which is the statement date, I make sure that whatever that I've used doesn't exceed 30%, right? That is a very good credit utilization. It shows that you are not desperate for that credit. It shows that you are not a high risk, right, for the bank to give you the money. So, and then when I get to the closure date, which is the date where they start charging me interest, right? So I make sure that my balance now is zero. I don't just pay the bare minimum, because if you just pay the bare minimum, you're not gonna come back from that. So make sure that, okay, by the closure date, if I use all the 2,000, then I pay back the whole 2,000. Then I start from zero again. Just repeat the same process every day. So this requires discipline. So if you do not have the discipline, you must not approach it this way. Get another way. I've already stated some ways that you can improve your credit score, but this is the fastest way. The fastest way, because it contributes to like 30%. So imagine if you are getting you're contributing 30%, 25% improvement of your credit score every single month. It really helps you, and it will improve your credit score within a short space of time. I hope this video adds value to you, and I hope that you will, if you are having a credit score issue, you'll be able to recover in no time. Cheers. I'll see you in the next one.